Hey everyone, Luz Gonzalez here, and this is Matt Goran, my friend, and he's a financial advisor. Hopefully you watched our longer video talking about all of these subjects, and if you haven't, highly recommend that you do that. With this video, we're going to be talking about student loans. So a lot of us, I know that I'm a millennial, you're a millennial, and a lot of millennials have student loans, and just in general, it's an issue in the United States. The having to graduate with a big amount of student loans and then having to know how to pay those off.
Sure. The average person graduates $26,000 in student loan debt, and student loans are now a bigger source of debt than credit cards. This is not a small thing to deal with.
Yeah. And so we're going to be talking about some of the strategies to think about your student debt and then hopefully pay off that student debt. So, Matt, what are some of the best practices that you can think of when it comes to, again, thinking about and just getting it paid off?
Sure. So I think it's first important to take a step back and think of which of three different categories are you in, or are your loans in. The first category is, do you have loans that are less than 4% interest? So that's APR, less than 4% APR. Alternatively, are you in a government job or a nonprofit job where you qualify for a student loan forgiveness plan?
So that's after like 10 or 20 years, depending on where you fall.
Right.
Your entire loan would be forgiven.
Right. And then the third category, people who don't qualify for those forgiveness programs and have loans that have higher than 4% interest rate. And there's very different strategies for these groups of people. If we focus on that first group, less than 4%. And I think the idea here is just let those loans ride for a while. Think of that as...
Even if it's going to take you 30 years to pay it off?
Even if it's going to take 30 years to pay it off. It's the same reasoning that you might have for a mortgage. There's no real rush to pay off a mortgage. It's really cheap debt. And the reason I'm pointing to 4% is because that is significantly less than what you might expect to get from some kind of investment account.
We have another video about that.
Yeah,
you
check
should check
that
it out.
So you might be in a rush to pay off your student loan debt and then end up hurting yourself in the long term because you could have been using those dollars to invest and make more money long term. So don't worry about those less than 4%. Let those things hang out. Forgive yourself for having those loans. Don't worry about being in debt. The next group...
If you have above a 4% and if you can refinance lower than a 4%, you should do that. I need to do that. Maybe you need to do that.
Right. So check out these refi programs that can cut those interest rates quite a bit and then put you into that category where you don't need to rush to pay the loans off. The next group of people are those who qualify for forgiveness programs. So if you work for a nonprofit, you work for a government agency, you very likely qualify for a program that lets you get those loans forgiven, that is to say, wiped off your record totally after about 10 years. And like Luz mentioned, it might vary a little bit depending on the program. So in that case, I'd say, again, don't be in a rush to pay these loans off. If you can just wait and make minimum payments after 10 years, they're gone. They go away entirely.
What about that feeling of just like, oh my God, 10 years of a loan?
Yeah, having debt can be uncomfortable. It's not a very fun feeling. And I also must...
But you said it's a little bit like a mortgage, right?
It's like a mortgage. Allow yourself to have debt.
Okay with that. Yeah.
Right. Think of it that way. You made a big investment in your own future, and now give it time. Let that thing go away on its own. And I must make the big caveat that only applies to federal loans. If you have private loans, they likely don't qualify for forgiveness. So that means you might have to pay those off ahead of time. The other thing to keep in mind is when those loans are forgiven 10 years from now, any forgiven debt counts as income according to current laws, according to the IRS. So be prepared to pay a heightened tax bill when those loans are forgiven.
That's really good.
Yeah, I expect, that said, that in 10 years' time or so, that Congress is going to change laws around that. This is such a contentious issue.
This is not. It's not a guarantee. Not at all.
Save
Something
your money.
That Matt
be prepared.
Thinks
Yeah,
might
be prepared
happen.
to pay the tax bill. Be prepared
Exactly.
to pay the tax bill. So you might get these loans forgiven. The federal loans might be forgiven. If you've got less than 4%, hang on to those things. Make the minimum payments. The last category, the people who are greater than 4%. And if you are not in a nonprofit or government job, that probably is going to include your 6.5% or so federal loans. And you're not going to beat that 6.5% or so with your investment portfolio. There's no reason to invest money in the stock market only to have a guaranteed loss for these student loans. So try to pay those things off. Make more than the minimum payments. Once you get your budget straightened out, once you get emergency savings all figured out, really dedicate a lot of your money to paying off those student loans. It might be a bummer that you can't do some other goals that you might have in mind, like taking vacations, buying a car, until you get those loans out of the way. But if you're thinking lifelong, just make that commitment. Try to pay those things down.
So again, the summary was 1.
Less than 4%, let those things ride and make minimum payments.
2.
If you qualify for forgiveness programs, then make minimum payments. Be prepared for the tax bill in 10 years.
3.
If you don't qualify for either of those things, try to pay those loans off as soon as possible.
All right, so this is Matt, and we'll see you again in another video.